Welcome back to the RationalInvestor.com's Broiler Chicken Show. We've got Chris and of course Josh and the whole sort of YouTube crew. Been working away on trying to make these videos look a little bit more polished of late. And now you can see they've got me with background and I can even see my uniform. Actually, I'm so proud of these hoodies. So pretty. This was a hoodie that we gave out in the Vancouver meetup. I can't remember what year that was. That was maybe 2020, somewhere in there. It was before the COVID insanity. I know that. So it couldn't have been 2020. It must have been 2019. Anyway, so this is just yet another look. Whereas Adam, did you come to Vancouver? Was that 2019? Sure. Wow, that was a few years ago, eh? Anyway, where do we begin today? This is our fun free broadcast that we do on YouTube. Help the public maybe get to know TRI a little bit better. Unfortunately, as we markets go up, markets go down. I mean, it's just venture capital. It's just normal. It is what it is. If anything, I kind of like to walk you all through the public through these cycles, and because I'm a bit of an oddball. Like literally every single day, I have shown up. Christmas, holidays, birthdays. It doesn't really matter. Either reporting in from the from various different places in the world. Actually, we had a fun little video, a fun little meetup there in Portugal a couple months ago, which was a lot of fun. And Josh was putting out tweets with me with smoking a cigar, doing our shows over there in Portugal. Or like I said, we had one here in Vancouver here a few years ago. I was also all over Europe there a few years ago. So anyway, the point here is we literally can walk you through when to be buyers, when to be sellers. Been literally doing this, especially in crypto now, for kind of the better part of a decade now. I've had the privilege, of course, of I think educating, maybe even couple thousand students over that period. I think we built some pretty good traders. Made that positive difference in the world that Jojo was kind of hoping I would do with the rest of the time that I still had left on this planet. Tell you, it sure is a difficult slog. It's cool as a sort of student of the market, you're always learning. And, I had a lot of the celestial people chime in over the past few years that, oh, by the way, there are a whole bunch of cycles all resetting basically simultaneously here over this 2020s decade. So get ready, slap on your seatbelts, and got to tell you, man, it's been quite a ride. If anything, a year or so ago, it was very difficult for me to do these broadcasts because there's no way I could buy anything. If anything, we had to be net sellers, and when sadly societal influencers, I guess maybe that's what we'll call them, they actually got involved in the crypto space, which gets a little dangerous because a lot of people in society will just basically blindly do what these people do, even though it's terrible investment advice. And then, in the euphoria of these cycles, you get these crazy shills that do nothing more than just try and take advantage of the inertia of the market. And it becomes almost impossible for me to stop you guys. So, I mean, the good part about it is we're not in that part of the cycle anymore. So I can go, phew, with regard to that. Now, when we actually talk about seriously thinking about going into the market and investing, we can actually do it with a straight face without going, what are you, stupid? Very, very difficult. But we're fine. I think to all intents and purposes, we're finally back into a window where you can actually seriously think about making investments within this space with a straight face. And actually, there was one idea that I got pitched this morning. I like this idea so much. I was like, no, you don't need to sell me anymore. Where's my order book? I got to go start doing some buying. So it's fantastic that we're actually back into that kind of environment. So that's a good thing. And of course, the irony of it all is that if we went out into the public and we said, well, what do you think about investing in cryptocurrencies right now? I mean, there's one little, I don't even know how to describe the tornado that is this SBF guy. It's shocking to see it all play itself out. I listened to yet another broadcast of his yesterday, and the guy is really good at saying something without actually saying anything. It just and then I hear you, but I'm gonna do what I want to do anyway. I guess now he can't do that. I guess ultimately the question is, and it is interesting to see that theoretically, as he sort of pointed out, because this space is technically unregulated, one could argue that, all they say is, oh, I guess I just fucked up. Oh, I guess I just screwed up. Oh, I guess, my bad. Oh, my bad. Oh, yeah, I can put it on my shoulders. But because it's unregulated, the regulators go, well, I guess this is the reason why we have to regulate this space. So you wonder, did the chicken come first or did the egg come first? Which one is it? If one wanted to regulate this space, would you not encourage a little track pant wearing entrepreneur? Speaking of track pants, right? I think that's the mantra of the space. But wouldn't you want to encourage him to come in? I mean, like, if you look at the books, it's staggering. There are guys that go to jail for like 10, 20 years for swindling $1 million and cooking the books. And this guy did it to the tune of billions of dollars. And because and probably at the behest of shady CFOs that used to be in online gambling arenas where they were cooking the books and cooking the software there. But no, there's no chance that they could do that stuff again. Yeah. I mean, you can't write better fiction than reality. I remember an old broker buddy of mine used to always say that years ago, you cannot write better fiction than reality. And even if we sat down a year or so ago and said, okay, this is the way the politicians are going to ram through crypto regulation, and everybody in the public is going to say, yes, this is a good thing. I couldn't have scripted it any better, folks. I really couldn't. And if we had written this out that this was going to happen this way, people would have said, you're crazy. There's no way that would happen. And yet here we are. So I do believe that 2023 is going to mark some sort of cyclical bottom. Cyclical? I don't know whether that's the right word. Cycle bottom. I always get that word wrong. And I do believe actually the whole sort of not only the threat, but probably the imposition of some sort of regulatory body on crypto is probably going to be the hallmark that if we look back 10, 20 years from now, what is the footnote in history? Oh, crypto was regulated then. That wouldn't surprise me at all. Same time, too, I don't think it really makes that big of a difference when it comes to us wanting to make good investments and make a killing from the space, because good ideas are good ideas are good ideas. And what I found fascinating, a really good analogy of this is through the darkest days of communist China after Mao took over, and the height of Stalin, and just absolute atrocities of things like cultural revolutions and all that bullshit. Um, Even through that, the communists in, and I want to say Shanghai, but I'm not positive about what city it was, but they even had a stock market that you could technically go and speculate on, and people were still making relative fortunes in the heart of the communist empire. So it just goes to show that there will always be gambling venues. And I hate to say it, you go to any sort of casino, especially the guys who really know how to play poker really well. And, there are some people that have systems and stuff for blackjack and roulette and stuff. But there are people who actually go to Vegas and they literally gamble for a living. It's their profession. And if you just follow the rules, you have a system, you know how to manage your emotions, you know how to manage your bankroll. In fact, in one of our previous renditions of our library, we used to use a bankroll management strategy video that was done by, I think the guy's name was Ferguson. I think he was a poker player. And basically the rules of gambling in Vegas are basically the same as the rules of gambling in the stock market. I mean, you don't like to use that word. Oh no, we're not gambling, we're gaming. Yeah, right, whatever. I mean, the point here is, and what we're doing in the market is we're not even that. We're investing. Sure. I always say in the market, many a short-term trade turned into a long-term investment. So it started out as, hey, I'm just going to quickly flip this for a couple quick bucks, and of course go and buy hookers blow. Well, actually, I'm trapped in a really shitty position, and now I've become, well, it's a long-term investment. That's what this is. Anyway, point of the matter is I've been playing this game a long time, and the rules of the game don't really change. At the top of the market, you're going to hear Brian saying, what are you, foolish? Why are you buying up here? And there will be even people that will come out at the top of the market and say, well, don't listen to those naysayers. This time it's different. And I can tell you, anytime you ever hear that word, you literally know the moment that phrase is expressed, you actually know that it's exactly the same as every other cycle. But like I said there a moment ago, hey, we are now over that. That's gone. That's yesterday's story. We've gone through the pain. And what's interesting is they always say these things come in threes. I don't know whether you've ever heard that expression. And, if you have like fender benders, always comes in threes. If you have, problems, with women or something, always comes in threes. Or men, I suppose, for that matter, always comes in threes. And I got a funny feeling. First, it started with Magic Internet Money and Danny. And interesting how he's, you don't hear too much of him anymore. Then it moved on to Do Kwon and the Lunatics. Again, interesting how he has quietly just sort of subsided into the background. And now we're wrapped up with this Bankman-Fried guy. So fascinating how on our Wednesday shows, one of my co-hosts there described him as sort of like, oh, he's the lovable guy of crypto. I don't know how lovable he is nowadays, whether people really are trusting of him. But I do find it fascinating that he is a very slick talker. He knows he knows what to say, but not to say too much. And I listened to a podcast or the CoffeeZilla guy. We were talking on the site through our daily briefs through the week about the CoffeeZilla guy. He seemed to be one of the only guys that really sort of could hold this guy to account. And I sort of was listening to I was over the weekend, somebody posted in the lounge that the SBF guy was being interviewed by Mr. CoffeeZilla, and CoffeeZilla guy, I mean, quite literally, SBF is simply saying, "Oh well, I guess it was just a mistake I made." Oh well, I screwed up. Oh, hands in the air. Oh, silly me. And it looks like he's gonna get away with it. Shocking, absolutely shocking. That's what it. So, any of you crypto enthusiasts, just the one thing that you should learn out of all of this is if you make any money whatsoever, go and buy politicians. As soon as you buy politicians, then you don't even have to worry if you're committing $1 billion fraud. Just buy as many politicians as you can, and you're made in the shade, which is really a sad, sad commentary on our society, eh? But if anything, hopefully this generation clues into how brutally corrupt the whole system is, where you go, I can't believe this guy's going to get away with this. It's stunning. You can't write better fiction than reality. Oops. Oh, there's a $4 billion ledger mistake. 4 billion. What's $4 billion between friends, right? Anyway. Okay, so there's your rant to start the show. The good part about it is we don't really have any conflict of interest here at TRI. We've built this beautiful platform. I'll say our reward for the past 4 or 5 years is, man, we have poured our souls into bringing this concept called the Delacour Index, which Delacour happens to be my middle name. I was working on this concept basically for the better part of my entire career. And I'm in my 50s now, so I'm getting up there. And then, I happened to stumble across that. And I actually did it all online. I used to actually do the DI index manually and used to actually write out the scores of the indicators one by one on a chart, and then add them all up and then divide by the number, blah, 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 blah. So that's when we used to get our price charts. Actually, we used to subscribe to services that would produce price charts, and they would be delivered to the brokerage house on a daily and weekly basis. And when I was, in university and stuff, we used to get price charts in the mail and stuff. Actually, even before that, when I used to trade commodities back in the 1980s, and the charts would just be like tissue paper. Anyway. Super excited. We finally got this platform to the point where it's actually producing usable information. It's tough when we get into these kind of environments up top here, because in essence, the market is saying that it's now overbought. The question is, does it sort of run out of inertia? Usually what has to happen is there has to be some sort of shock to the system, which actually breaks the market, breaks the previous trend, and then we head the other direction. I don't really see any shocks to the system right now. If anything, I think the system got sort of a vote of confidence. The system itself, especially since the end of the Cold War and the end of sort of the socialist movement, of the 20th century. The system is very a business-oriented, capitalist-oriented system. So interestingly enough, I think that the system is actually a little happier following this fall election down in the United States, where, sort of as a protest vote following Mr. Orange Toupee, the socialists were kind of given just the green light to take over the US government there for a couple of years. And unfortunately, the sort of the closet socialists, the guys who would love to see the world move sort of more to the left, in that kind of environment, they get the green light just to go ape shit. So guys like the substitute drama teacher in my country, this has just been an absolute feeding frenzy for him. But now that that political machine down in the United States has swung a little bit back, I don't know whether we could say to the right. I would, we were kind of thinking it was going to be a red wave. It turned out to be a red whipple, ripple, beg your pardon, cripple for the crypto kids. So, in that kind of environment, we got a little bit, it's sort of like the lava lamp was heavily tilted to one side, and now at least it's balancing out a little bit. And if anything, hopefully, this is a relatively good environment for business, because business doesn't like government all one directional. And, you look at the stock market, you tell me, how's the stock market fared over the past little while? I wouldn't say done very well. And probably just pure function of the fact that the U.S. government was all tilted heavily to one side. It's not rocket science. So, why did the stock market kind of look like this? And you might even argue past a couple of years, when was that crazy election? There it was there. Yeah. So you can see just something, Russell 2000 is the 2000 stocks in the United States of America. So pretty good proxy on capitalism generally. So the election was right here. And you can see on balance, the market has not been very happy. It had sort of like a little relief rally, the end of that push. Basically the Fed took interest rates to zero. That's usually what's going to happen. This whole part of the market, of course, went into, this is the sort of hyperinflation worry thing was going absolutely crazy. Fed sort of says, okay, we better cool our jets. Let's try and get religion, calm down a little bit, everybody. And of course, that was forced on them by the market. It wasn't really like they had any choice. And here we are. Now they've sort of hit the reset button. And ironically enough, November 2020, November 2022, basically we're exactly the same place where we started. And now, through here, I would imagine the market was kind of like, Jesus, are these socialists going to take over? You can literally see coming out of October, the market went, okay, I think they put the socialists away. And so here comes the stock market charging back. The only problem with all of this, of course, is that the politicians don't really have a hell of a lot of power here. The inflation genie has been taken out of the bottle. And the cost of money equation, I think, is probably more determinant before this thing can get going. And if anything, what we might find is that over the next couple of years, we kind of just go sideways. But, that's anybody's guess what the hell is going to happen here. If we look at something like the NASDAQ, I mean, it's interesting. Crypto follows the NASDAQ very closely. So they're very similar. I guess this is basically what I've been sort of thinking here for NASDAQ buy. We have an old expression in the market, buy when it snows and sell when it goes. Sort of the seasonal window, buy when it snows. And it sure looks to me like that's a pretty well-defined letter of the alphabet. So, I do like the idea that sort of, you can see this image, top end of the range seems to be somewhere up in that area. Bottom end of the range seems to now be somewhere in here. And I wouldn't be surprised if we play ping pong for a while here. So in actual fact, we were even kind of talking this morning about, are you getting your names all on the books to take advantage of that seasonal rally? Because I think the seasonal rally will produce profits. It usually does. This is pretty business as usual. If anything, probably coming out of this year because of the political event, we might actually see that things relatively firm off of those floors because, like I said, the narrative that sort of drove us into that market state, that narrative is over now. The socialists have been told to pack up. And interestingly enough, Biden historically has been sort of known as like a compromise kind of politician. So my hunch is he's probably to get stuff done that he'd like to get done. It would be interesting to see what, for Mr. Biden, what's a priority. I don't get the impression that it's a priority for Mr. Biden to shit on crypto. Frankly speaking, I think he's too old, and I don't think he even really understands the space that well. Having said that, I think there are people within his administration that would like to do things like get central bank digital currencies and stuff like that up and running. And I think we're like a regulation. And of course, if we can tax these kids, keep in mind the socialists love to tax. So, if we can tax these kids, we'll probably see probably the introduction of regulation, but I don't think like the banning of crypto. And I think, frankly speaking, crypto's technology, especially with the way DeFi is going, I don't think you can ban it now. That's just too much. But can they start putting constraints? And, this is where I was going earlier. Was this SBF guy kind of almost planted in the industry to blow this up in a horrific fraud that screams regulation? It seems awfully coincidental how this stuff's all playing out. So I do like the idea of regulation, but I don't think outright bans are really things that are coming down the pike. And to this end, there are ideas that are looking very attractive. We started to get our actually here before I get into that. You guys have all seen this 100 times before, so it's certainly nothing new. We are finally, actually, I like this image that I've done recently. This is just keep it as simple as possible. Don't overthink this stuff. People in the public, they love to overthink investing. And actually, I think that gets you into a lot of trouble. You have to understand that when we're going through these parabolic moves and price just relentlessly day after day after day just keeps getting pushed up, unfortunately, the people that are sort of developers in this story, they get this almost like validation by price moving up that they're somehow smarter than everybody else when they're really not. It's just a function of where we are in the cycle. And this is the kind of idea, a rising tide lifts all boats. So and this is the dangerous part of this, is that, and I remember distinctly through here, people start to think that Brian is smart. Brian's not that smart. Brian just happens to have learned a couple simple principles that if you follow the principles and you do basically follow the rules, you do relatively well in this game of investing. Try and work with some sort of algorithm, some sort of reasoning system that I will invest if I see this criteria. And, especially when it comes to investing in venture capital, how the hell do you figure out what value is? So if you can somehow figure out what value is and you can invest in value in venture capital times when the money cycle goes absolutely crazy, that's when valuations they just get thrown out the window. And people don't even want to have the conversation about value. The image that I wanted to show you, which I think is a really good testament to this, and I love this because I produced this image like literally 3 or 4 years ago. So you can't even say that it was like, this is something that I did even recently. I mean, this is years ago, and it's just so absolutely perfectly true. That's not what I wanted. What do I want? I want this one. No, keep hitting the wrong button. I want to maximize that. How do I do that? I guess like that. There. So I can't stop you guys from buying up here. I sit and I try and have conversations with you guys about value and what does it cost to actually mine a Bitcoin. And people are like, "Shut up, Brian. We don't want to hear that." In fact, I even had people in who had taken the education program that just get so wrapped up in these bull cycles. They'll say things, and the worst part about this is this one's really blatant. I mean, you can see the massive divergence in the MACD histogram. And the RSI divergence was just ridiculous, how insanely overbought and how in massive divergence this whole damn market was. And I actually had old students of mine, which is so frustrating, actually come out and say, man, you know what? Technical analysis doesn't matter. Come on. And then other people who say, you know what? This story is so good and this guy is so awesome and he walks on water. We're going to start breaking your 2 rules of investing. Oh, no. I hate that stuff. I mean, the good part about it is the 2 rules of investing, they make it so that I can still talk to you people when this happens. So, yeah, crazy. So, can't stop you guys from buying. Man, I can't stop, won't stop. If anything, what I absolutely love is now Ben has made it, again, this is sort of along this thinking. We have one site member who's made it so easy for you guys to see this. Unfortunately, my images are usually just an absolute mess. But Ben, my co-host for the Wednesday show, just did this image on our little app that we have. And by all means, I'll throw that on the YouTube if you want to check out that app. It's a pretty cool little app. Ben has this one image right here that he's put so far, the fib time study. I mean, this makes it so simple for you to see it. So we are now into that window. If you had stepped up and placed your bets here, there's the end result. It's up here that Danny and Magic Internet Money are going crazy, that Do Kwon and the Lunatics are going crazy, SBF and No Neck Guy saying Solana is the next best thing since sliced bread, even though I've seen that on repeated occasions. They've had to literally shut the whole network down because it was broken. So really, they're not really that great. But nonetheless, people made gazillions and gazillions of dollars hyping up the story in the friendly part of the cycle. It's just the way this damn game goes. All of those stories are all like crumbling one after the other after the other. In fact, actually, it'd be interesting, listening to Paul. He trades a lot of these cryptos, and people ask him about SOL, and he's kind of like, I don't know. I'm still skeptical. Actually, there is a name, but I want to get filled first, and I haven't been filled yet, so I don't want to show you the idea. But I was shilled the idea this morning, and I just looked at the chart and I said, this is a no-brainer. I just got to go buy some of this shit now. But good old Brian, he doesn't like to chase, so I just work stink bids. So anyway, once I get filled on that, then I'll tell you all about the name. But there's a bunch of names. Actually, interestingly enough, we're even into an environment where I'm starting to see people banging out doubles and stuff. So we're already back into a little bit of a frivolous market state here. So anyway, point of the matter here, this is Ben's chart, and I really like this, fibs and time studies. If we do anything at all like we did previously, then, once we get into sort of halvening events or post-halvening events, then all hell can break loose in this space. Also, too, I noticed that the politicians don't seem to be changing their bent about printing money. So anybody who thinks that this sort of hyperinflationary cycle is over, I think you better re-examine. I mean, who knows how high this damn thing goes. My hunch is we're probably going to go bang up against these lines in here. So what is that? 200 Gs, 250 Gs? Yeah, that wouldn't surprise me. Somewhere up in that area. That would be 4x off of the old highs, 60 Gs. Yeah. It's not unrealistic. I mean, maybe this even calms down a bit here, but I don't think the huge money is made in Bitcoin. I think Bitcoin's story is getting built out. I think more importantly, though, we do continue this sort of cycle of rally peaks following halving events. So, where exactly this thing peaks. And of course, like I said there a moment ago, the worst part about what I'm seeing in the economy is because they've got the money supply growth on I guess, a geometric curve. God, I remember when I was in my early 20s, right? The economy, just the thought of the economy breaching $1 trillion was just an absolute staggering number. And now, that 1 trillion turns into two turns into four turns into eight, 16, 16 to 32. Here we are at 32 trillion now. So in a weird sort of way, these kind of number growths, it's not shocking what's happening here. What is shocking is the fact that the value of our currency is collapsing in front of our eyes. And probably, it'll be interesting to see. I see that our Western society is being Asianificated and it's being South Americanificated. And the one consistent theme through the 20th century I found was the absolute massive price inflation of things like the Indian rupee and of course South African currencies or South American currencies. Oh yeah. So does North America now have to play catch up? Does Western Europe have to play catch up to that world? Will it cost $1 million for a loaf of bread? What the fuck is a dollar worth? Yeah, could Bitcoin be $200,000, $300,000, $400,000? And ironically enough, the actual relative purchasing price of the currency going forward hasn't really changed a heck of a lot. Yeah, I actually think that that's a very realistic possibility for this 21st century, which is pretty shocking. But anyway. All right. So that's all the rhetoric. The point here is, can you force yourself to actually start stepping up to the plate and investing in ideas, getting ready for that sort of November 2025 peak? Exactly what the price is of the particular assets, well, that's up to you. In fact, I'll show you. This is one asset that actually I think that this could look a lot like Do Kwon, because remember, Do, he bottomed at like 50 cents a coin, topped out at $120 or thereabouts. You notice there's this would only be what, 1, 2, 3, 4 doubles. God, I remember in previous cycles there are plenty of names that even did bigger doubles. And I thought it was interesting. Even today, I noticed somebody was saying, "Hey, I'm already banging out doubles." So here's a good example where look at that. I mean, right off the bottom here, you already got yourself free coins. So can you force yourself to go in there and start accumulating? Especially like these kind of formations, you can see how it did here. This is what they call a narrow sideways channel. So if you can, and actually I told the person who showed me this, so it'd be really, excuse me, really interesting to put on like Bollinger Bands, Bollinger Band studies. And just see if you can start seeing these compressions. I don't know whether you can see that. We'll call this your free technical analysis tutorial for the day. But this is in essence the best way I've found over the past, oh God, I've been working with Bollinger Bands since the first trade I was introduced to Bollinger Bands. It was on I remember it specifically, it was on a Windows 95 operating system. So that's how long ago it was. And it was in the bond market. I think it was in Yeah, it might have been 96, somewhere in that area. So what's that? Jesus. Almost 30 years ago. Anyway, um, point is, hopefully you can see when the bands compress like this. Oh boy, get ready. And I got to say, this guy, I've been touting about this guy. He was the one telling us about Amazon and how he expects the crypto market to go same way as Amazon correction went the end of .com boom. And I would have to agree. I think there's a lot of logic to that. But here's such a great analogy, and I suppose I should get off my butt and finish the volatility segment of our education program. I've never really done the volatility studies any justice. I have sort of a half-finished module. I've just never finished it. But I tell you, if I was going to teach a course on how to use Bollinger Bands, that's it, my friends, right there. I'll even put in here. If I was gonna teach a course on TA, I think probably the first thing I'd do is I'd ask if Johnny Bollinger was going to, actually, I'll even say on volatility studies. So let's be a little bit more specific. That's not a bad example. Actually, like that, throw that in the lounge. So somebody remind me to add this to the Bollinger Bands tutorial. Really good example. And there's no reason why you couldn't build like scripts. Whoops, you are currently signed out. Isn't that interesting? I just got signed out, Chris. Chris, are you still attached?
I didn't do it, but everything still looks good on YouTube, so that's all I know.
Oh, isn't that bizarre? Please sign into your channel to continue using the studio. Sure hope I don't kill the broadcast. Wow, look at all this. Wow, what a mess. It's like it created a brand new profile. Check this out. I mean, this is the screwy world. I don't know, where's the screen share? This is the screwy world about this YouTube and Google and shit like this. Look at this. It's totally creating a brand new user for me, and it wants me to create a new channel all right in the middle of a broadcast. Like, what the hell? Yeah, how bizarre, eh? Well, and then I hit cancel and it says, oops, something went wrong. Great. Actually, I think I did see that this has been monetized today, eh? So you guys are moving the ball forward here. So thank you. Appreciate that. And I think I saw a couple contributions to the cause. So thank you very much for all that, guys. How the hell am I going to get back over there? Isn't that bizarre? I hope I don't wipe this out. Let's see what happens. let's see what happens. What the hell just happened there? Are we still live? All right, that's good. I haven't broken it yet. All right. Oh, look at that. Yeah, God, this cheeky bugger. Isn't that incredible? It might not like us both logged into the same account simultaneously, all right. Let's see. It looks like we've got this thing up and running now. So how do I get back to, because I do like sort of seeing what you guys are chit-chatting about. It's just so bizarre how it totally kicked me out there. Anyways, giving it the secrets away of Bollinger Bands, and I don't know. Hopefully you guys got some value out of that. It only took about 10 clicks, and it looks like I haven't killed the stream, so that's kind of good. The Matador asked, do you have 2 Google accounts? I think I have about 37 of them, to be honest with you. So, all right. I wanted to give a shout out because I was pretty impressed with it. Paul gave us 50 Rons. All right. I love those Rons. And there is somebody, girls s18.site. I don't know. Have you ever heard of anybody on the interneting scamming you or shilling you pornographic material on these YouTube channels and stuff? Does that ever happen? That's a bit shocking, I suppose. That made me laugh because seeing Johnny Hoagland trying to deal with the shillers, that would really make me laugh.
Yeah, he's always apologizing for it. So, and I don't think that there's much he can do about it.
All right. Well, anyway, the ads are personalized. No, but I don't watch any porno online. What are you talking about? I'm a good, upstanding citizen. Now, what are you inferring there, Fair? It's okay. Okay, so anyway, I went on ranty there for quite a while. My apologies, everybody. Let's see what you guys are saying. Hello from Australia. Hello, Nick. I hope you're doing well there today. Let's go rant, buy when it snows. Someone goes, totally, DMAC. I mean, if you can do it, I mean, are we here to make money? Still long on KDA. What's KDA doing? That was that Coda or something like that. See what you got there. That's too bad. So if you're timing your purchases, you better hop off on the fail of those lows. That was that big ugly day there. If you're a little old lady, I suppose that's not a terrible name to come in and look. Doesn't look anything at all like that. And and actually, this is a bit of a warning sign. You see how it's making lower highs and lower lows, lower highs and lower lows. It tried to put in a little bottom, but if you're trading this, then you better respect it and hop off on that date right there. But little old lady, Nanny Nibbles, if the problem there is, what's the story? I don't know what the story is. I'm a very skeptical person when it comes to crypto these days. I better be given a pretty good story. Anyway, EGLD 5-inch. I don't know what that means. EGLD. Suppose also too, there's a little bit of a concern I would have with this tether thing. I don't know whether its days are numbered or not, but whenever they want you to shake us out as public of the market, usually they start bringing in the tether FUD. And I know guys like Chico Crypto and stuff like that, he's never been impressed with tether. So anyway, we'll see how that goes. So be careful there. Don't hold all your net worth in these quote unquote stable coins. Not really impressed with the fact that this EGLD has broken this market structure pattern here. That's not a good sign. So and also too, look left. I mean, you can see where the bottom is on this thing. It's right there. So do we have to you could easily see over the next 6-8 months, this thing swim around underneath here, this huge area here. So be forewarned. I don't see any weekly W's there. A good way, and I was mentioning this on the website the other day. One thing, I built this weekly commodity trends survey. This model, this is what I used to use when I was a commodities broker, just try and say, look, we want to invest with the trend. What's the easiest way to identify trend? It's things like the 13-period EMA on the weekly chart versus the 30 SMA on the weekly chart. If that's higher than the 30 SMA, if the fast moving average is higher than the slow, then we got a pretty good idea that this thing is quote unquote trending higher. And so if we want to sort of stack the odds of success, in your favor. I like those ideas. And we just have a simple ranking system. Names that are sort of getting very close. They're at the bottom end of the range. Their 50% levels are substantially higher than where current price is. Like this ETH, it's 1193. The 50% level is $2,800. It's interesting, actually. We did some options analysis on Friday, and I was really surprised to see how many put options have been written on ETH down here. I don't think ETH wants to be down here for too much longer. I don't know. I mean, you never know exactly what the reason is, but man, there are a ton of put options, like to the tune of like 10,000 contracts at specific strikes down here, which are shocking. Which leads me to believe that the price should not stay down here. But anyway, we'll see what happens. But you can see the short-term moving average on this particular guy, he's a little bit lower than the medium-term moving average. So as a result, he's still sort of like fives are, this asset is really cheap, but it's still trending down. Sixes are, this asset's cheap, but now it's starting to trend up. So I would strongly suggest that you concentrate on sixes. And actually, it was really interesting. Eddie, you got that link handy to show John's website? I'll try and not show the login to get it, but maybe you could, what you could do for me, Eddie, if you could. I don't know whether you're here or not. Oh, there it is. Okay, so but we don't want to, not going to show the login. We'll put the login over here. Can you type in the chat room that's not on the screen what or can you, and better yet, can you PM me what that password is? Make damn sure we don't show it on the screen. Where are you, Eddie? Eddie, there you are there. Here. I won't show it on the screen. But I do want to show is John put together this script. He did the whole damn universe. I mean, just everything. It's pretty darn impressive. Oh, okay. Sorry, I got that wrong. Okay, so that one. And I'm not going to show it on the screen. Sorry, John. Total doofus. And then that one there, and that one there, and there we go. All right. So first and foremost, if you are using John's script, understand no recommendations, no, you use it on your own volition. And if you make money, great, slide some bucks to him. If you don't, well, no guarantees from the management. Point here is he had the crypto, and you can see he's covering the whole damn universe. It's so cool. He even has, this is the, I think this is the 13 EMA, 30 SMA on the entire sort of low capital count crypto name. You can see it's still trending down. But he has gone in here and he has all fives and sixes, and look at all these sixes. I mean, there's just tons of them. And the cool part about it is he's covering everything. On TRI, we have a crypto top 30 list, and there are a couple dupes in here, which we have to get rid of, I know. I've asked our tech department to help out with that. But in essence, top 30 names, blah, blah, blah. And we've got the scoring for the top 30. What's interesting with John, of course, he's taking this total next level. And I don't even know how many names he has in his universe. I think it's in the thousands. But you can see, I mean, it just goes on and 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 on. And he's scoring them. I guess there isn't an actual count here. But the point of the matter is sixes are that, like I told you, at the bottom end of the cycle. In fact, maybe he even has the image on here. Yeah, there it is. So what we want to concentrate on are assets that are at the bottom of the cycle. They're cheap, right? And keep in mind, this is the way most sort of institutional players play the market, right? You want to buy down markets. That's down here. Actually, I don't even know what I'm showing. Where's the YouTube page? Yeah, there we are. So we want to buy down markets down here, and we want to sell up markets up top here, right? And the mean or the 50% level, this is like, man, this is where it bounced to. So if we can somehow concentrate our efforts in these kind of names, that's where we're going to make the most amount of money. And that's what gets like the 5s and the 6s down in here, is we're cheap and we're trending back up. So, on the TRI dashboard, and we've built this out for the Crypto Top 30, we'll probably build more and more names like this down the road. But our top 30 coins, you can see, number one, the whole damn market is cheap. I mean, and kind of like what I showed you off of John's website page here. I mean, you don't get 5s and 6s when you're up here. In fact, you get scores of like 1s and 2s up here. And if anything, you see 1s and 2s, and you kind of want to go the other direction. You want, if anything, you want to be thinking about shorting, not buying. So just the simple fact that these dashboards are spitting out 5s and 6s here, this is huge, folks. And actually, I'm not quite sure. We had a little bit of a problem with our Binance API, and all our screeners got wiped out here. I'm sure we can repopulate them. It's just a question of, oh, there we go. Okay, so yeah, they're coming back now. Good. Here is weekly 13 EMA, 30 SMA crosses. So that's basically what this is, and I want this to populate basically with this information for the whole crypto universe. Can you show me, like I said, this image right here? I want to see names that are in this wheelhouse right here. And as I said there a few minutes ago, and what the hell, I'll show you. I guess it's not really that big of a deal. But, names like this, if we change this to a weekly chart, you should be able to look at this image now and say, oh, okay, I can understand that this should get this score. And actually, I'd be interested. Let's do a poll just from what I said, if you guys are paying attention to. What do you think on balance this score should be? Are we up at, first off, where's the mean? So, there's the 50% rule. Are we above the mean? Or are we below the mean? I'd say we're below the mean. Are we substantially below the mean? Yes. So just based purely on our curve here, I think this story is like down in here. Would it be getting a 6? And actually, John's improperly coded this. This should be a 5 here, and this should be a 6. Those actually should be reversed. But 6 really comes in on the cross here of the moving average. Do we have that moving average cross here? There's that moving average relationship. So interestingly enough, and actually look at that, Aaron got it, Bob got it, right? You should look at that and go, well, it's not overpriced. We're not going to have people come in. If you ever hear somebody say technical analysis doesn't matter, what do you think the odds are that if we go to the technical analysis engine, when the market is up top like that, and we actually find that the technical analysis engine is saying, stay the fuck away from it. The odds are probably pretty good. And actually a really good example of this in the stock market right now is the energy sector. Notice the XLEs, look at that, it's getting a 2. And you can see things like the basic materials, they got a 3. If you look at a lot of commodity markets, I think they actually look pretty dangerous. They look very toppy now. They've had huge run-ups over the past year or two, but of course the public thinks that just goes on endlessly. So, just as a contrarian kind of look, you tell me, does the XLE that's giving us a 2 reading, do you see how if we just looked at this over the past year or two, that the mean is actually down here and we are substantially overbought? It doesn't get a 1, i.e. a short signal, because the moving average, the fast moving average, is still above the slow moving average. You can see we got a little bit of a head fake cross there, which is kind of interesting, right? Because it did look to me like the energy market was breaking down, but then all of a sudden, out of September, October, the market came screaming back. And I have a funny feeling that has everything to do with the politics down in the States. But anyway, we'll see how that plays out. Point here is, because this gets a 2, this would be exactly like when Bitcoin was up top here. Not now, but like when we were up here, same sort of thing. Where is the 50% rule? So there's the mean, and we are substantially above it, but the moving averages were still positive. You could make the argument that this would have gone from like 2 to 1. Let's see when that would have happened. Come on, let's go. That is going to take too long. 3x. Let's go a little faster. All right, starting to break down. Probably still a 2 because the moving averages are still bullish. All right, you can see, oh boy, we're in trouble now. Now, this is an interesting one because if it won't give us a 1 unless it's a good trade, but you can see there's the cross, and you can see how instantly we went zipping straight down to the mean. So it gave a 1 reading very briefly, but then boom, now that we're at the mean, it's not going to be so egregiously wanting to short. I mean, ideally, beautiful short is when these come and cross bearishly, and you get like a nice, beautiful M up here, something like that. And you're looking for that big dump right into the 50% rule. So point here is that, when we were up top here, you heard Brian barking about, oh, you're an idiot if you buy here. Cost of production's down here, blah, 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 blah. Weekly commodity trend survey would have given you like very low scores, but we're not in that kind of environment. Now, can you understand why we're actually getting relatively high scores? Again, where's the mean? So now we're measuring from this low back up to the high over the past couple of years. So there's the mean. There's price. Hopefully you can understand we are a long way away from the mean, but you can see how we're still trending down. So that means we get at best a 5. And as soon as this guy actually starts to firm up in price and start to work higher, then you'll have the moving averages cross, and that will change to a 6. It's just simple as that. So, are there any examples of 6s that just came in? Well, I was impressed by good old Litecoin. Look at that bottom. Do you now see why Brian is so jazzed about Litecoin here? I mean, this is ridiculous. It's not really ridiculous. It's just business as usual. There's the mean, 50% rule. What letter of the alphabet is that? This is a weekly price chart. What the hell has that Beamish guy been telling you about weekly W's? Is that kind of significant? I think so. And lo and behold, look at what just happened here over the past few weeks. So I often see that this happens. This is, I think, a very good trade. Now, having said that, of course, the damn thing will break down. But, you never know in this crazy business. But I like the idea that this thing has found some sort of pivot. Now, you could just go and buy this, and it's entirely up to you. I mean, M's and W's, you know how Brian's brain works. So as long really anything around $66 or less, I'm happy. I know there are a lot of guys that will say, okay, well, now that this moving average cross has happened, now I will drill down to the lower time frames, and now I will start hunting bullish setups. So we said, where was that? We said that the cross came in. Looks like it looks like it was right off of this bar right there, eh? So the resolution of this inside bar, this is actually a very bullish fractal, that inside bar breakout right there, that's the buy level. So if we go down to like, say, like a, I don't know, 4-hour chart or something, where is that level? Well, turns out that that is that big honking W down there. And actually, this is exactly a trade that I did in the futures market on Friday. This is what's called, and I love these patterns. They are very, very consistent. And in essence, this is a cup and handle. So you see that the market, come on, you see that the market had come back to this level a couple of times. Then we put in an even tighter consolidation, and hopefully now you see the cup and handle. And quite literally, all you do is you just buy on, maybe you put the buy on stop there, but anywhere in through here. Clearly, this is a pretty darn powerful candle right there. Somebody must have said something or done something. Probably if you looked at the order book, you see a similar, there's probably a huge flush of buying interest. Probably you can see the cute little W that came in down here. You could have front run that trade, and that would have been difficult, but nonetheless, that's clearly where the buy is, and boom, up she goes. So I might argue that, a patient, disciplined trader might even just say, well, let's go throw on reload zones and let's see whether we can sneak in off of a revisit of that area down the road, somewhere down in that area. That wouldn't surprise me. You could also, too, now that this thing has turned back up, you could be hunting trend continuation patterns, right? So something like the botch setups. I've got 1 kilo, I've got 2, I got 3, I got 4. It looks like a little bot forming just right inside of here as well. There to there, there to there. So the big bot, we did correct 233. So the big bot, it's going to want to get long from, oh, what a surprise, that level. And you can kind of see how this is set itself up as a head and shoulders pattern here. Something along those lines. All right. So you can kind of see how that's setting up right off the bot level there. And then there's also a cute little bot, right? This is actually the best way. I've had a lot of people ask me, Brian, there is this huge honking pattern, but I don't want to take that much risk. How am I going to get in on this trade without having to take that much risk? Well, all you do is you just drill down and you hunt for littler trend continuation patterns within the bigger trend continuation pattern. So we drill down to, like, say, a half-hour chart. All right, so there is the little bot that we talked about, boobity-boo to boobity-boo. And here is the little bot's trade entry levels. So notice we've got, looks like, let's go, boom, boom, boom. Oh, what a surprise. Isn't that interesting how you see that happen repeatedly? That basically now the bot is going to want to sneak you in on this, on a resolution of this W right here. If it comes in, you don't know if it's going to come in or not. So anyway, there's a fun illustration of how, now that the platform, and this is where, this is so next level, because, like, this is, I built this weekly commodity trend survey page. So you can get pretty much an eagle eye view of the entire market, like everything. I think the next list that I want to add to this is the tech, the NASDAQ 100, the tech stock one index that we have. But right now we've got the bond market, commodities markets, all the country funds, the crypto top 30, of which there's a couple of duplicates, and this is 27. So what the fuck, Brian? You're only following 25. The currencies, all the major currencies, you can see them. We cover basically all the big fiat pairs. The sector ETFs, I showed you the oil market. It looks like it's getting near a top. And oh, by the way, if we're thinking about a bottom in technology, then we should be thinking about a top in energy. So the correlation of that data makes perfect sense. And you see I have just the stock indexes. On this page as well, though, I also have the Dow Industrials. And notice we have a lot of tech stocks in the Dow Industrials. Salesforce.com, I think, is a perfect example of that kind of tech stock proxy. Disney, which is sort of like a online, you could make an argument that Disney is trying to turn itself into kind of like a Google, YouTube kind of channel, kind of platform. I think it's backfired horribly and terrible market timing, but that should be no surprise. But anyway, interesting to see that some tech stocks, along with things like Boeing, Dow, Caterpillar, there are some that are at the bottom end of the range, but they haven't quite shown trending higher signals yet. And if anything, I think that Salesforce.com is an absolute perfect comparison to crypto, right? It's basically the same kind of thing, but this is stock market. So no bottom yet there, and you can see the moving averages. They look a lot like Bitcoin, same sort of thing. When they turn back up, then we'll know we're trending. So the point here is when you look at these, there aren't a lot of names. Now it is interesting. Remember we said maybe a top in oil. So it is interesting. We're getting some stocks like JetBlue. He's right at the bottom end of his range, and you can see he's trying to turn back up. Same sort of, and what I meant to reference there earlier, which I don't know whether you guys are aware of, but it happens, is purchasing managers have a choice. They can either spend money, especially for companies, they can either spend money on energy, keep the trucks on the road, keep the lights on, keep the offices heated, blah, blah, blah. Or if they don't have to spend money on energy, let's say it's the middle of the summer, right? Well, maybe then they have to worry about air conditioning. But let's assume maybe that we are in a weak energy market and energy prices are really low, bottom of the commodity cycle. They don't have to spend a lot of money on that. So what do they spend money on? Because they have budgets and they get given X amount of dollars to spend. So if energy doesn't gobble up a huge portion of their budget, they'll often spend money on technology to improve productivity. So when you had weak oil prices there at the end of last century, you had the dot-com boom because money went into tech. So interesting how we're starting to get that kind of correlatory conversation. Tech stocks, whether it be things like Salesforce.com, are very, very low, cheap priced, ready to turn back up. We just need to get a signal that they're starting to trend. Things like the transportation stocks, things like JetBlue, an airline, right? Price is really weak because of the high oil prices, but it looks like where they're, as soon as we get any kind of trending signal, these things are going to be worth taking a good look at. And then, like I said earlier, what a surprise. If we look at the actual energy sector, we see that it actually is looking very toppy and might even be near a short. So in a weird sort of way, you can kind of see the correlation of market forces here. And, I think you guys have all learned that crypto is very, very highly correlated with the risk market and the stock market and really the NASDAQ. And what a surprise. Look at all the 5s and 6s. And I think that is super cool. Great application of this tool. The market itself is validating this thesis that commodity prices should be topping now, tech stocks should be bottoming. And just so you get an idea, like we can look at something like the Dow, or we can look at like something like Bitcoin, but just try and keep this thought in the back of your mind. Here's another example of a short that I really like. This is ConocoPhillips, and it also has a 2 reading. So you can see oil stocks look very toppy. There's a big old M working there. But just try and think of this. And of course, keep in mind, the public can't do this. And this is half the reason why it happens is because the public can't think of this. But here we are at like 11,461. Try and go back into time. The last time we were in one of these cycle pivots where we were supposed to go from fear cycle to growth cycle. And that similar period, there's a number of them over the centuries, of course, but the most significant recent one was in 1980. So this was the last fear cycle peak. Crude oil prices went crazy in the 70s. Thank you, oil embargoes. And gold prices, of course, you all remember gold prices went to absolute insane levels. So this was the stock market for the next 100 years, the NASDAQ. And actually, that used to be the commercial back last century for all the old timers who remember that. Oh, so we said we're at 11,000 now. Look at where this was, 114. And this is that breakout to the new growth cycle, 1980, 1981, 1982. I kind of think we're in this kind of environment right now. Got to get through 82, Benner cycle, 22, 23. It's going to look pretty nasty. But what I need for you to understand, and let's put just a big fat historical reference. Here we are. Is the market going to go up? Is the market going to go down? But look at what happens by the time we get to the end of this growth cycle. You ready? It gets crazy. Actually, why don't maybe we'll go out to like maybe a 2-week chart. So there's our same part of the cycle. This was the greatest generations fear cycle. You go back and watch previous broiler chicken shows. Great talks on all that kind of stuff. Of course, take our education program. That'll teach you all about that. But look at what happens by the time the end of this cycle is 2000. So where the hell was the market by the time we got to 2000? There's 2000. Remember, we were thinking about investing somewhere in here. Let's even go, there's November 82. This is what we have in store for us. Can you actually envision this happening? That's our future. That's pretty crazy, eh? So try not to get too wrapped up in the minutia of day-to-day price action. What we really want to try and do is see if we can just sneak our way in. And this probably isn't the best example because my feeling is that we were a bit higher here. But can you try and just sneak your way in, especially on things like reload zones? Like, I get the impression that this is basically that 2019 freak out. So if we draw the similarities, right, do good old reload zones, you notice that there's 61.8, good old mountain man. And it also corresponds nicely with the previous breakout high. I think that this high right here is that Donald Trump January of 2020 stock market peak. And then, they dumped it. Then the Fed printed money like crazy. Then the whole market worked its way down. And then we pivoted up and oh boy, look out. So try and think of this image. And actually, you know what we should do is let's go. And actually, I should stop talking, shouldn't I? Anyway, I hope you guys are enjoying the edutainment. It's kind of all right, so let's take that. There's our image, right? And this is the Fed taking interest rates to zero and then the hyperinflation we just went through. And now let's project this into today. Let's see how close we are. And it's interesting because Larry Williams is even saying he's uber bullish. I don't know whether we go all the way up here or not, but I suppose anything can happen. 2020, here we are. So let's see where we are. A long way to go, eh? So it just goes to show, the more things change, the more they stay exactly the same. So there is that Fed freak out. Notice this pattern almost looks identical, eh? So, oops, where did I do it? Yeah. So there's the Fed freak out. We can overlay that there. There is the size of the move. There we go. So something like that. Hey, look at that. That's not bad, eh? What do you think? Pretty good projection, eh? It's a little bit off, but you get the idea? Can anybody out there understand what the hell it is I'm going on about? Look how similar these moves are. It's shocking. Look at that. Yeah, that's incredible. So, that's probably tweet worthy, So, and actually it's interesting because I did put out a tweet, speaking of which, actually, I might even draw this up later on. That is compelling. Look how this consolidation here lines up perfectly with this. Like, who the fuck, did somebody plan this? Do you guys see this? That's insane. Look at this straight line dump, basically straight line dump, then counter trend rally. This looks like it's a little bit off, but gee whiz, so close, eh? And I was telling you, one of our site members, Eddie, he was doing a similarity with Amazon. It's quite remarkable how similar Amazon's price action is. So anyway, hopefully you can see history is not really doing anything new here. It's actually pretty cliche. So I do like the idea that we're bouncing here, and I think that's what this bounce is. If we look at things like the election cycle, I should probably, oh God, I could spend another hour on this. Should I keep going down here or should we go to the questions? Brian getting green. Is he starting to get bullish vibes? Is my hair green? Oh, goodness. What is it? Do I look green? Oh, because I got a green outline. Jesus, I think Brian needs to invest in a toupee, eh? Jesus, that's terrible. So I put out, just to finish this thought, because I sort of halfway through, I should probably finish what I wanted to say here. What page is it? This one? Here. I put out a a tweet recently with a conversation with take me a second to find it. Chris, you know her name. Spit out her name for me, please. I always butcher it.
Danielle DiMartino Booth.
There you go. Done. I'm not quite sure why I've got a block on that, but thank goodness we've got Chris around here, right? Put out a tweet with where the hell is she? This here. And she believes that there is a significant credit crisis coming down the pike. The economic data is sort of like wishy-washy. I mean, the interesting thing is we used to say in the market, the only reason why the Fed raises interest rates, I don't know whether you're aware of this or not. There's only one reason why the Fed ever raises interest rates. Anybody know the reason? Chris, do you know what's the reason why the Fed raises interest rates?
Is it to kill the market intentionally?
Nah, maybe. Keep in mind, these guys are banksters, and theoretically, they're not supposed to play the stock market. I think a lot of them got their fingers burnt there a year or so ago because they were caught playing the stock market. They're not supposed to. They make big enough salaries. The last thing in the world they need to be doing is playing the stock market. But we used to have an old expression in the market. Why does the Fed raise interest rates? And the answer is because they can. So if they ever have an opportunity to take interest rates higher, they will. Absolutely. Because theoretically, short-term interest rates is the primary tool that the Fed has to manipulate the economy. That's the only thing that they have. I mean, Mr. Bernanke, and thank you, Mr. Bernanke, for making Subway sandwiches go from $2.50 to $20 now. You can see what quantitative easing policies do, and hyperinflation printing money uncontrollably. That's not a good economic solution to poor economic conditions. It's a bad, bad solution. And it literally means that you are going to, in essence, destroy the standard of living of the citizens of your country. It's just as simple as that. Money printing dilutes the currency, dilutes the purchasing power of the currency, which in essence dilutes the standard of living of the citizens who use the currency. And unfortunately, usually it hurts the bottom end of the income curve much more than the upper end, because the upper end at least has a discretion to demand higher wages to offset the price inflation. Whereas a guy making minimum wage, he can't really go to his boss and say, I need more money. The boss says, I need cheaper workers. There's the door. So Fed only raises interest rates because it can. And then it will keep raising rates until it gets to the point where it can't anymore. And then the definition of it can't raise interest rates anymore is the economy itself starts stalling. And we have a basic rule. The economy usually, or the Fed and the central planners, because keep in mind, all central planners, it doesn't matter whether you are under the label of a communist totalitarian dictatorship like Stalinist Russia or like Winnie the Pooh China. That's interesting. Kind of bad timing for you to be calling me. Anyway. Or whether it be the US Federal Reserve Board, which to all intents and purposes is the same thing. They always go too far, too much for too long. And usually it breaks the market. And then they have to scramble. Okay, well, maybe we raised too high and okay, give them back a few cuts. But now, with the way the market is now, and if anything, this makes perfect sense, is there is a major credit crisis coming down the pike, and it makes perfect sense. We had the health crisis. It broke the global supply chain management. And this sort of, we lived in a world of the late 20th century, early 21st century of what they called just-in-time supply chain management. You probably also heard it under the label of globalization. And everything was all integrated around the globe to try and sort of reach economies of scale. One might also argue, too, that it was a colluded, coordinated effort. Hold on. A colluded, coordinated effort by the capitalists to take advantage of the fact that the Soviet Union and the sort of socialist movement around the world collapsed through the latter part of the 20th century. When I lived through it, they called it downsizing. They called it right-sizing. Basically, companies like Apple just moved all their manufacturing to slave labor markets. I mean, you see the conditions in Foxconn, people working at their work posts for like ridiculous number of hours a day and living in basically like almost like prison camp conditions. The point here is that the sickness that broke that just-in-time supply management model, which in essence created almost like a vacuum for semiconductors. So automobile manufacturers couldn't sort of keep spitting out brand new fancy cars. We heard about it, so nobody should be like, whoa, that's news to me. So what it ended up happening, and this is the reason why I have her on the screen, what ended up happening was that whole sort of manufacturing side of the equation just collapsed. Of course, Fed had to take interest rates to zero. They saw what was happening. Basically, shouldn't we debate mortgaging our future? Shut the fuck up and just give them the money, right? That kind of conversation. So one side effect was that consumers, because the Fed took interest rates to zero and just said, here's all the money you ever want, consumers just kept spending money. And what ended up happening was they couldn't buy that brand new fancy car off the car lot. So they started to shop for used cars. And more importantly, the car dealers, and this is where the inflationary push came in the used car market, and why the Fed and the banksters didn't see this. I think they did see this. It's just that they wanted to hyperinflate the economy. We've had lots of conversations about that in the past. How do you continue this silly debt model? Once you hit like 120, 130% GDP, you have to hyperinflate the economy. That's the only way out of it. And that's exactly what's going on. The Great Reset. That's exactly what Klaus's wet dream is all about. So the point here is that there weren't any new cars to sell, but there were tons of consumers throwing money at these auto dealers. So they're like, well, just go get any damn car we can. And so they went and gobbled up as many used cars as possible. And they sold them as basically new cars under new car pricing. We had this massive hyperinflation in used car prices. Why? Well, because the auto dealers didn't want to take a hit in their profits. So they were turning around selling used cars at new car prices. That's where you got your massive hyperinflation in the auto industry. It's not rocket science. It actually makes common sense. And the funny thing is does the public know anything about this? Not really. They just were hey, the interest rates are zero. You want to borrow money to go buy a car? Come on down, right? So they did. The problem is that the cars sucked. They're used cars. They got shilled used cars, and of course auto loans, because these stupid cars are like 60, 70, 80, $90,000. I mean, ridiculous prices just for a fucking pickup truck. But anyway, point here is that they were shilled them, and now this lady is saying there are a ton of these used cars that were sold as new cars with new car loan prices. Now the market's calming down and people are like, okay, well, it turns out that there are semiconductors out there, that the auto manufacturers have relocated, that they are getting their supply chains back in chain, and they're starting to produce new cars again. And all of a sudden, mysteriously, there's no demand for these used cars, and the used cars prices are going back down to where they were. But you got all these suckers in the public who went and bought these used cars at retail prices. They're sitting massively underwater on these loans. And she's saying that there are anecdotes that people are just literally walking away from these auto loans. So, oh boy, that sure was a mouthful. It took a while to explain all that, but hopefully you guys understand what's going on there. The point that I would just make here is, full circle, why does 22-23 look the way that it does? And you can kind of see it. I mean, it's fascinating. You don't think history repeats itself? This is incredible. This is tweet worthy. This is 1979.80 price action in the NASDAQ. And lo and behold, this is 2022 in the NASDAQ. And I don't think I have those date rights. I think this is actually we'll go, I don't know, say 79 to 82 or whatever, something like that, right? And here we are. This is probably like 19 to 22 today. I mean, that's shocking how similar that is. That's absolutely shocking. So looking at this image, like I said, I kind of think that we're sort of right here right now. I actually think that looks more like that. That peak, I think, aligns with that peak, and I think this peak aligns with this peak. Why? Thanks to Josh and his awesome blogging. Where the hell do I find blogging? Where is awesome blogging? Awesome blogging must be over here. Library. Awesome blogging. There we go. Notice U.S. midterm elections dotted line, this sort of blue dotted line, it's tough to see. This is the all-time high in the stock market there. This is the peak from the summer. And this is where we're supposed to end the end of the year. And if you go and look at something like the S&P 500, which is probably a better example, you see that that image and what we're doing right now are shockingly similar. So here's the S&P 500. There's that peak from last year. There's the peak from the spring. There's the peak from the summer. And here we are now. So go back to awesome blogging. Okay, that's this peak right here. And you see that this peak, there's August, September. This peak right here, you can see into the end of the year, we're going to come up against it, but we don't break to new highs. So I get the feeling that that's basically, there's that summer peak. Here's where we are. You know, we're working our way through December. We're running out of the month. I think we could probably just sort of, jawbone our way up into that level there. But I find it very hard to believe that we're going to be able to get through that gap and that gap without having to do some correcting. Right now, we're just fighting at that gap right now. So we've still got quite a bit of slogging ahead of us. And we're going to be nowhere near those old highs. So, if we go back to that conversation about the NASDAQ, I mean, that's just such a super cool chart. What this says, and this is, I think, DeMarco's sort of credit crunch, is that we rally into the end of the year. Those are those summer highs. And we have one more push to new lows into that credit crunch in the beginning of the new year. I do like that thinking. Interestingly enough, on the other side of that, notice that this is just straight line up. Rah, I'm a bull, get the fuck out of my way. And I have a feeling that that's what we're going into. Nick or Richard, I say 1922, 79, 82. It feels incredibly, and looking at this price action, especially the way the Fed fucked everything up there, that's shocking how exactly the same that is. I mean, that's ridiculous. So anyway, that's probably the image of the day. If we were going to have an image of the day from this broadcast, I think that's it. I mean, that's incredible. And then, like I showed you, I mean, what are we supposed to expect out of this thing? I made some crazy Bitcoin predictions, this kind of projection up here, and somebody's like, $1 million for a Bitcoin? What are you, crazy? Well, I don't know, man. Call me crazy. I mean, if the NASDAQ, and you can see how similar this is, right? What did the NASDAQ do? This is the last greed cycle, right? Is there to there. And I mean, what the heck did the NASDAQ do in that time period? So seeing Bitcoin go to $1 million, if NASDAQ goes, that's 150. So there's 10x right there to 1500. And then it did another 3 after that. So that's like 30, 40x. So here we are at 20 G's. Let's just use this number, 11,000. 10x is 100,000. 30x is like 300,000 on the NASDAQ. It could happen. I wouldn't put it. I mean, I don't think this cycle is the same as this baby boomer cycle. This was pretty damn crazy. What would be really interesting is to see what the NASDAQ did through the greatest generation coming out of the Second World War, and topped out in the early to mid 60s, because that's what I think this cycle is going to look like. And what that tells me with regard to Bitcoin is we're probably going to look more like this blue rally peak, which is to like 250,000, than the yellow 17, 18 peak. That's just my hunch, but whatever, it doesn't matter. All right, man, that sure is a whole bunch of nothing, eh? Sure hope you guys got some edutainment out of all of that. In the short term, I check in on our Wednesday shows. We do a show on Wednesday evenings specifically about crypto. And if anything, I kind of like the fact that we went through an up wave. The market did rally nicely here. We're going through a down wave on the sine wave, and price is just parked. So clearly somebody doesn't want this to go down too much from here. You can see that we're just about through the apex of this down part of this sine wave, eh? So that is your down wave for the sine wave. It's not much. My expectation is this actually looks very body, eh? So we could do something along there to maybe there. So 33, but no more than 66. I would go down to here. Oh, yeah, we did. Okay, that's cool. Yeah, you could even do that. So 33. Project that off of the lows. Bought trade. Oh, look at that. What a surprise. So you can see market structure. We'd like to see a W on the other side of this trend line. So it's interesting how we did come up to the bot level there. We got one low, we got two lows, we got three lows. If somebody said, Brian, I'm fine with taking my shot against these three lows, that's not a bad trade level. I mean, it is a valid setup. And you can see that we're heading into the bullish part of the sine wave here. So call me crazy, but 18,000 here in the near term on the corn, it's not outlandish. And really, you might even argue, if this is a megaphone, I don't know whether I draw it off of here, but 1, 2, 3, and then a nice little dump all the way back down there into the new year. That wouldn't surprise me. I mean, maybe, in typical Bitcoin fashion, from what I understand, there is quite a bit of reason to look for the market to be uppy here into the end of the year, especially with the Bitcoin options. They expire at the very end of the month. This is kind of a short-term pattern though, so this isn't really that long. This is only into the 9th. But I could see something like that. That wouldn't surprise me. If we think the NASDAQ and the S&P and all that are going to go back up against those fall highs, well, you can see there is September, October. That sort of late summer rally window is this August, September peak, anywhere up in there. Could we see, if I just did a simple reload zone against that range, would it be logical? That level right there is Mountain Man. Maybe this is going to carve out some sort of, inverted head and shoulders. And we look something like that, up into there, then back into there, and then we go. And I don't know, do we go higher or do we break down? Tough to say, but I could see something along those lines. That wouldn't surprise me. So, especially considering the way that we are thinking, the market should probably rally into the end of the year with all those, awesome blogging. And then the decennial report, they're even more bullish. Awesome blogging. And then the January barometer, awesome blogging. Could we see just a general relentless push higher here into the end of the year? Sure. Would not surprise me one bit. And then also remember too, in crypto, 5s and 6s just do not happen every day. So if we're in an environment where there are a lot of 5s and 6s, I wouldn't fight this. What I would say is, can you make some money out of this? I thought it was hilarious. Like I said just earlier today, and you never know how the hell they're going to come out. I mean, you just don't. But our buddy, the awesome Amazon Bitcoin analysis guy, he went and forced himself. I mean, gee whiz, what letter of the alphabet is this? I mean, I don't know this name that well, but if you had come to me and said, Brian, I bought that W at the bottom end of the range, it looks like that was a reload zone of this range. Did you get your double off up here? What is that? That's $1.64. So 320, 330. Why do you think the market actually stopped there? The market stopped there because all these guys that bought here were selling half on a double. That's why the market stopped there, folks. And what's also interesting too, right, is, you can make the argument that this is sort of like a washing machine. So big pop right here. They bring it right back down into a reload zone. And the guys are we're gonna reloading again. What a surprise. Rinse and repeat. So, at least we're not in this. I mean, like I said, a year ago, we were in this kind of environment, and it's like, oh, there's the bottom end of the range, guys. Come on, we're walking into traps here, and this jerk. And this is what really bugs me about this world is not a single person has hold this jerk to account. And yet he was on social media. In fact, he was on like societies. And actually probably not even there, probably society's social media right here. And why didn't he at any point up here say, it's probably not a good idea to buy this? Yeah. Just put your money away. Just cool your jets. And boom, down she goes. Interestingly enough, W's start coming in at the bottom ends of ranges. And then boom, there's Eddie again, banging out doubles like a boss. Anyway, I don't know whether he did that or not. Okay, it's 12:25. I got probably, let's say, 45 minutes here to answer questions. So let's get on with the questions, and I should be doing what I'm supposed to be doing here from moment one. But I hope you guys all got some value out of that. It was an interesting rant. Now, where the hell did I put those questions? Those over here. There we are. All right. So let's see how we did. I think I answered all the questions into the beginning of the week. I can never remember if I do or not. Okay, 11/20, December 4th. Is that where we are? Jesus, already December, right? Yeah, look at that. December 4th. All right. Skyfire, Francis. Actually, you know what? I got to blow my schnoz. So. All right. All right. Hi, Brian. We just talked about yield curve inversion in level 3. All right. So when the Fed started purchasing 5, 10, 20-year Treasury bonds during QE, I take it that they were trying to influence the long end of the curve. Yeah, to a certain degree, yeah. Given the Fed has an infinite printing machine, couldn't they, in theory, prevent yield curve inversion by soaking up all the long-term debt instruments? What's stopping them? Yeah. I believe that they did quantitative easing as nothing more than getting the bad mortgage-backed securities off of the international how do we phrase this? Competitors? I don't know whether competitors is the right word. Enemies? Well, that's a bit strong of a word. I think to a certain degree, the United States of America became slightly morally corrupt following the 2000 baby boomer market peak. Really? Imagine that. They kind of did an unholy deal with the Chinese. The Chinese Communist Party wanted desperately to stay in power. And Tiananmen Square was basically the same thing for China that Boris Yeltsin was, and his famous Moscow when he stood up on the tanks and said, "No more." And that basically, he was the mayor of Moscow at that point. That was the end of the communist dictatorship in the Soviet Union. Chinese went through exactly the same thing. But, and what I find fascinating is the guy that actually was in power then, he just died like last week, which is shocking. The cocksucking son of a bitch, uh, totalitarian dictator, one person, I would be willing to bet dollars to donuts that guy was personally responsible for probably tens of thousands of human people being murdered. And he just eventually, yeah, he actually died at like 96 years old there last week, and he was still holding on to power. You still saw him at CCP party official meetings and stuff. So that was, and I think he was the primary backer of Winnie the Pooh. And to a certain degree, Winnie the Pooh is basically his sort of like protege. I can't remember what the guy's name is. Big square fucking Coke bottle glasses. Looks like Brezhnev kind of guy, and probably grew up in that sort of time frame. Anyway, so there, I believe that quantitative easing was nothing more than the Americans were basically told by the Chinese, if you don't buy these bad bonds off of us at fair prices, that we will dump them in the open marketplace, and that's the end of the United States of America. So I do remember specifically the day that Ben Bernanke announced the quantitative easing program to the U.S. Senate, and it was remarkable to see how shifty his eyes were through that whole speech. And you could just tell he had to make the speech, he had to sell it to the American public, but every politician that was present in that room and all the banksters, they all knew exactly what was going on, but they had to go through the charade like this was some intentional program and some intentional plan to have the banksters enter the market. And I can tell you unequivocally, they did not want to do this, but they had their hand played. They had no choice. So that's a very different interpretation of how history played out than what 99% of the world are going to tell you. Everybody's entitled to their own opinion, right? So you come to me, you ask my opinion, that's my opinion. The official word is that the U.S. Federal Reserve came in and basically pretty much did something well beyond their mandate. They did things like they bought mortgage-backed securities. There was no mandate in any 1913 legislation for the U.S. Federal Reserve, which is basically a cartel of banksters, private citizens. There was no mandate for them whatsoever to be in there buying any securities whatsoever, ever. So clearly they broke the rules. But I think, as I said, had they not broken the rules, I think that the United States of America, the dream, would have gone the same way as the Soviet Union. And ironically enough, I think that was what was supposed to happen, was you had these two Cold Warriors that sort of went to tete-a-tete for a half a century, completely blew up their country's balance sheets. The Soviet Union ultimately succumbed because they couldn't find the creditors to bail them out. The United States of America survived because the creditors would bail them out. They created this side fund, the Fed's balance sheet, whatever the fuck that is. And this is the world that we live in now. If anything, the Fed and the banksters, they don't want all these bonds on their sheet. And they are trying desperately to sort of tighten, quantitative tightening. The irony of it all is that the all of this talk about quantitative tightening, it's almost laughable when you actually look at the numbers. Somebody actually posted this in the lounge, which was really interesting over the weekend. there is the quantitative tightening. It's like, come on, that's your quantitative tightening? Do you see this image? People make a joke. Do you understand what happened in 1971? Why did our society go to fucking hell in a handbasket after 1971? Well, there's the answer, folks. And the sad part about it, right, is, 1971 going through, this was Milton Friedman's time, right, 1980. And he's saying, you print money, you're going to create hyperinflation. Same thing. There's no difference. Nothing's changed here. So how ironic. There's your quantitative tightening. Come on. What a joke. And unfortunately, as I said earlier, the scary part about this is that you really shouldn't look at this on a linear scale, because if you look at it on a linear scale, it's just going to get steeper and steeper and steeper over time. You should actually look at it on a log scale. And then all of a sudden you see, well, actually, this is just a very comfortable trend that they have established here. And one might argue that the hyperinflation that we're going through right now is the fact that they've taken this thing way beyond trend. Really, and you could argue that, Milton Friedman, he started to get upset because they were taking it way too steep, too much money printing. Slow the fucking money printing down. They got to the point where it was a little bit more sort of predictable, that 2 to 3% growth, right? Money supply. And so, okay, we have relatively stable prices. But then, through the sickness and, that's where they're going to blame it on. They went through massive money printing. I might argue that this is a function of there was too much debt outstanding relative to GDP. So they had to print a whole bunch of money. And the Fed is, quote unquote, monetizing the debt. But anyway, the point that I would just make with all of this, and to your question, is I don't really buy into the official statement of what was going on. Now, through all of this, could the Fed actually buy different parts of the yield curve spectrum to artificially manipulate the yield curve? And the answer, I think I actually even said that the answer was yes. And they called it Operation Twist, where they tried to make long bonds have a higher yield than short-term treasuries. The only problem with that is that whole model, everything about lower interest rates, I believe, has everything to do with, of course, you guys aren't going to like this, but this cycle. So in essence, this event actually, in my opinion, was the, better give them some money, was the event that actually pivoted the interest rate cycle. And what I found interesting about all of this is that, and it might even have to do with the Saturn-Pluto cross, but I believe that these things all move in cycles, and it's very difficult. This really doesn't help too much. I think I might have it here. Let's see, are we lucky? Hey, there we go. So this happens to be the Saturn-Pluto relationship, and it's shocking that when Saturn and Pluto go into conjunct, you notice that we go through growth cycles. When Saturn, Pluto are in opposition, we go through regression, growth, regression, growth, regression. And interesting here, you go, well, that's not regression, Brian. It is if you actually look at this on an adjusted M2 money supply. Keep in mind, in this world, diluting the currency was a big no-no. You were not supposed to do that. In this world, fuck it, who cares? And so we got the hyperinflation that we're living in. And these numbers get produced that are kind of artificial. And, just kind of like what somebody said earlier, $1 million Bitcoin, what are you, crazy? Well, in this money printing world, actually, that's not unrealistic. And where the hell something like the Dow, that's what this is, the Dow Industrials, where this thing actually tops out here, man, it could be staggering numbers. You can see just this was the 1915 to 31 growth cycle, the 46 to 60 or 48 to 66 growth cycle, the 82 to 20 growth cycle. You can see, they all, I mean, interesting how the 15 to 33 one, it topped out with a huge orgy blow off top there into 28, 29. But in essence, if this is the same, you can see on a relative basis, you can see the Dow at 80,000 at the end of this cycle. Wouldn't surprise me. So that's, how do you, Dow's there at 30,000, it's going to be 80,000. So that's like almost a triple. That means Bitcoin at topped out at what, like 60,000, triple that. That's 180,000. You can start to see the crazy ass fucking numbers to the upside just based purely on the money printing and not really anything to do with actual growth. So anyway, point of the matter here is that I think that a lot of this interest rate cycle had everything to do with we were in a falling interest rate environment. We are no longer, and that I believe that Mr. Powell knows about this. JP Morgan, millionaires disregard astrology, billionaires don't. And I remember what was fascinating through that cycle top, I remember distinctly Uncle Jerry, gotta love him. He specifically said right through this event, and I think it was right. Actually, I think it was right here. No, it was here. Right here, 2021. Remember, this is the insurrection, all this shit right in here. I remember him right up here, him specifically saying, we just got to get through year end. We just got to get through year end. We just got to get through year end. Now, why would he say that? Because I believe he knew that that was a massive cycle pivot. And only if you believe in these cycles, the only way you can explain what the fuck just happened there was if we went through some sort of massive cycle pivot. And so as a result, once we actually hit this event window right here, all conversation about quantitative easing, all conversation about the Fed being friendly, all conversation about low interest rate environment, everything stopped that date right there. Everything. And since that date, the Fed has been like, there's no quantitative easing. And, I showed you that M2 money supply. They're actually going through the process of trying to actually unwind all of the economic manipulation that they did here to just try and keep the damn system going. Because the interesting thing about this is that this cycle should have been massively deflationary for our society. Massively deflationary. That means lower prices, negative interest rates. Now, how do you keep this whole hegemony bullshit banking system working if you have negative interest rates? You can't. They all start falling apart. So the absolute number one priority, and Powell himself even said it, is they had to get on the other side of this cycle pivot. Once they were on the other side of this cycle pivot, they all now go, phew. The interesting thing, though, for us in the public is this was supposed to be a deflationary period, falling prices, rising standard of living, but they did everything possible to negate the conversation about deflation, and it became a conversation about disinflation. We're still going to make sure the economy's inflate because that's the only way our bankster crookster models work is if we inflate, then that way we get to charge you interest, which is our profit margins. Now we are officially in a rising interest rate environment. And this now goes on for the next 40 years. Get used to it, folks. We now should expect no more of this, we're going to bail you out quantitative easing. No, that story is over. Now we're all into, you have all been locked into financial slavery. You all owe us this money at interest, and those interest payments are only going to increase for the next 40 years. Get used to it. And it will get so bad that at the end of this cycle, there will be talk about these Western societies cutting every kind of social spending program, every military program, because they have to somehow come up with money to service these absolutely horrendous national debts. And remember, folks, try and remember this for the rest of your life. Granny herself, remember Build Back Better and all that bullshit? She was trying to get you to borrow as much money as she possibly could at this event right here. Why? So she could lock you into financial slavery for the rest of your lives and probably the rest of your kids' lives. That's the way, that's how evil this goddamn world is. And it really pisses me off that Spirit actually lets this happen century after century after century. And if you don't believe me, I need for you to watch this video. It's not me. It's a gentleman who's been fighting this fight for like literally, I don't know, 40 bloody years of his life. The poor guy, he was literally trying to get this message out back in the 1980s, and nobody would listen to him. I hope people are listening to him now because he's a really nice guy. It's tragic that nobody is listening to this. And the banksters, they just keep getting away with it. Generation after generation after generation, and nothing changes. Anyway, so there's your answer to your question. I don't know whether you were expecting that, but I don't quite look at the market the way that you're looking at the market. I actually look at it very, very differently. All right, number two. Let's see how we, if I got any chance. At 1:15, I have to hit the road because I have to be at Liam at 2:00. So we've got basically a half an hour. All right, you have recently taken trades on Sushi, Uni, Link, etc. with stop loss against lows. Well, some of them yes, some of them no. I didn't like the look of this Uni trade that I put on, but actually, in hindsight, it looks like that idea is working. I like the Sushi. Link, it looks a little suspect. I mean, there is an interesting sort of dichotomy. Do I want to look at this like a little old lady approach, of which I really wouldn't, and I shouldn't be liquidating on any kind of weakness? It's little old lady. Right? You should be betting, maybe 1%, 2%, 3% on these things and make sure not to break Brian's second rule of investing. On the Uni, I was a little bit about the purchase price that I did, so I walked away from it recently. So the stop losses against the low. Some of these, if you're going to do little old lady, you wouldn't be doing that. And actually, you would be adding on weakness. So I'm a little bit waffly on that, to be honest with you right now. With stop loss against lows, these coins are also in a perfect location for it. Yeah, see, I mean, I actually prefer the LOL kind of approach to risk management here. But I mean, it's not like there's a right or wrong. If you buy LOL and it's underwater, you just got to sit there underwater and you kind of feel kind of goofy. And the SHOD target is similar to the trade target 50% rule. Given the current location of these alts, how do you decide to take? Yeah, you just heard me kind of going, is it part of column A? Is it part of column B? I mean, the good part about it is we are now officially in the stage of the market where you can be hunting both, which is, I mean, for the longest time, about a year or so ago, I had to sit there and, people who are taking the education program, I just sit there and say, there's just nothing for us to do, which sucks. You're trying to sell subscriptions and all that kind of shit, right? Probably Litecoin's a good example. Oh, good. Actually, starting to pull back over here a bit. That's good. How can I do this? And actually, any of them. Where? I got a bunch of them here. So sushi here, for example. Could you LOL this? Absolutely. In fact, really, this should be LOL. Just go and buy a whack, kind of like what Eddie was showing you. You get your little pops in these things, sell half on a double, then take the free coins and put them on some other exchange or put them on a USB device and bury it in your backyard and just forget about them. Because my hunch is, ironically enough, at the end of this cycle, which we know should be about, let's see if I can get it on here. There we go. So this cycle should come to a fruition right there. And believe it or not, folks, I know you're going to think I'm crazy, but I would not be surprised if a name like this isn't up there into that event. I know you're going, Brian, you're nuts. But I've played this game long enough. I've seen this happen repeatedly. So call me crazy. And there you go. So little old ladies, can you come in and take shots here? Sure. The good part about this is just 50% rules. Keep it simple, stupid. Don't overthink this stuff. What's the statistical odds of this thing coming back into 50% rules sometime over the next year or two? And that's $12. Here we are. That's 10x from where we are, just a healthy 50% level. So little old ladies, absolutely. I would say this thing's not going to start trending higher until we W out on the other side of this line. So that's going to be a ways away. Interesting how that comes to an apex right there. I wouldn't be surprised if we do something like that, maybe, and then woohoo, kind of, and who knows where the hell the woohoo takes us. Maybe this doesn't break out to new highs. You never know, but it wouldn't surprise me if we do break out these highs and it's another huge honking big ass bull market. Then I would keep an eye on wherever the hell this tops out. And that's a long, long way up there, right? And also remember too, this is linear, right? So just understand that, you're at $1.40. What's a double? Well, that's to like $2. That's there. But if we break out this higher, that's 23. Well, what's a double? And just think like the banksters model. They think in percentage terms, and we can start thinking about things like Amanda's penthouse. We were having fun talking about this earlier today. The last cycle, that 17 cycle, right? We did the penthouse, and so 200% extension, and that's the first stop of the penthouse. But Amanda, she went to like 300%, 400%, 500%. And then, believe it or not, these crazy ass numbers up here actually make sense. I mean, that's not unrealistic. So, I don't know what this bull market's going to look like. Nobody does. But if we do get a head of steam behind us, it's totally possible. I think we did it versus Bitcoin last one. See if I can just show you. There we go. So there is that old range. I don't know whether we topped out there or not, though. It doesn't look like we made that. That's probably a bit much. But you can see just even off of this low, back up against this high, right? There's 400%. So believe it or not, this stuff can happen. So on something like sushi, could I see, if we do get a head of steam going into that next cycle, could we see something like that? That's not outlandish, believe it or not. I know it sounds crazy, but it isn't. And then the worst part about this is that, is this because sushi is so great? Or is it because the US dollar is absolutely collapsing in value? So, and frankly speaking, I can't answer which one it is. It might be that basically it takes $1 million. Because keep in mind, Weimar Germany, same shit. Um, could we see a wheelbarrow of money to go and buy a loaf of bread in the United States of America? It's definitely possible. Wouldn't be surprised if we see something along those lines out of Charlie. So where's that cycle peak? That would be right into there. Yeah. So I could see Charlie do something like that. I suppose we never did get your crazy blow off top on Charlie. There to there. So we kind of stalled out at the old high. So, probably a good idea, like sushi, keep a real close eye on that old high. Yeah, darn. Anyway, that'll probably be a pretty important. Actually, probably sushi wise, that's probably not a bad sort of comparison. Yeah, we go up and we test those old highs. And if we don't cleanly break out through the top, then you probably look for some sort of peak. Suppose if we go on a log scale, right, something along those lines, I could easily see Charlie pop up in here if he gets his act together. The only problem is I don't think Charlie's at Charlie anymore. I always like to call this Charlie, but I think Charlie's long gone. Anyway, yeah, hell, you could even see something like there to there, and then clone that there to there, and that takes us up into there on Charlie. That wouldn't surprise me. It wouldn't be outlandish. Maybe though this cycle, this 4-year cycle on sushis, all they do is they go up and test the old highs. Stuff like this might actually crank up into these levels up top here. This coming cycle, that wouldn't surprise me. Anyway, okay, so let's keep moving this ball forward here. I don't know whether that answers your question. What I'm going to simply say is there's no right or wrong here. Just understand that, trying to think, somebody asked me about a name earlier today. What was it? Oh, EGLD, right? So this EGLD, could you make the justification that this is nanny nibble bubble? Yeah, it's cheap. I mean, anywhere sort of down below this area, reload zones. I mean, I don't know what the bottom is on this thing. Maybe look for a bunch of different sources and see if there's some sort of technical bottom here. I didn't like the fact that this thing has made a new M here and failed. If anything, what you're hoping for on this thing is sometimes these big M's will come in at the bottom ends of ranges and they're actually harmonic patterns. So something like that. Although you don't really see a harmonic all the way down to 70. So I might be a bit skeptical on that. So, but the point, I guess, here is that this one, if you had said, I'm a nanny nibbler, right? And I don't know whether this is the low, but let's assume hypothetical that this was the lowest low. So that means, well, Brian, I came in and I bought 1% there. Maybe I bought another percent here. And maybe I bought another percent, maybe even over here. Right? Maybe I saw this W, I added another 1% there. Remember, do not break the 5% rule. Don't do it. Just don't fucking do it. So if you're 1, 2, 3, 4, and okay, I did one more on the break and new lows, I bought another bit there. So 1, 2, 3, 4, 5. I now have 5% of my stake invested. And I don't even know if this thing's actually bottomed. So here's a scenario where that total market cap on it. Yeah, I don't even know if I'm looking at the right damn thing. All I did was I just typed in EGLD. Yeah, that one's probably better for you. Hey, there you go. Thank you, Eddie. All right. So this is probably a little bit more responsible sort of investment plan. It's not a bad idea to try and hunt for some sort of base. You can see how there's a nice W down in there. So thank you for your assistance there, Eddie. Let's put that back on a regular chart, and then let's go like that, and there we go. All right, so we're coming back down against bottom end range. Same thing I said before. All right, well, that Beamish guy says that reload zone 61.8. Okay, so I bought 1% there. He says he loves his 78.6. So this guy's an idiot. He doesn't know what the fuck he's talking about. Okay, well, I'll buy another one there. All right, and then maybe, oh, look at that. There's a W, so I bought another there. So I got 1, 2, 3, 4. I'm 4% in, and I'm not allowed to risk more than 5%. That means I got one more shot here of adding to this Nanny Nibbles little old lady approach. And I don't even really have a bottom here, right? I like the idea. I've told you this before. This is the weekly commodity trend survey. I actually like the idea of just simply letting the market tell me when this thing is actually trending higher. And you can see on this particular guy, we are still trending down. So I don't think there was any bottom here yet on this. Little old ladies, they're already pretty much loaded up. They only got one more shot. And then that's it. They can't do anything more. So hopefully that helps you sort of see that just because you're little old ladying, that doesn't mean that there's any sort of bottom here. You just forcing yourself to come in and acquire down at the bottom end of the range. But this son of a gun, I hate to say it, but it almost looks to me like this thing, and this is assuming this is the bottom. I don't know whether it is or not, but I wouldn't be surprised if actually we have to do something like this now. So if this is the bottom, let's assume, oh, boom, there's your bottom. This thing isn't even going to start to turn up, and you actually to be like, hey, this thing's not going down anymore. It's actually going up. May of 2023. That's like literally 6 months from now. You just got to sit there and do absolutely nothing, and you don't know what the hell's going to happen. Then you start, at this point, you can see the W's are starting to come in. These moving averages have probably crossed back bullish. So you can start to see that, hey, now I got a floor to work with. If I want to hunt setups now I have the permission to do that. So that's sort of, I hope that helps answer your question. Keep in mind, little old ladies, great, not really in a hurry, just want to be accumulating. Then mysteriously, they're going to get a phone call out from me or their broker when we get into here. Hey, guess what? Remember that name we were buying a couple of years ago? Well, it's finally doubled. It's time to start selling half. So that's the way I would look at that. I hope that helps. Timing purchases, I don't know. I'm a little leery, especially tax loss selling. The fact that Bitcoin hasn't even put in a W yet. I still think that there's a little bit more pain to go in this space, folks. Yeah, that would probably be my simple knee-jerk answer to you. Is I still think that there is more pain to go in this space. So if you are going to be trading and you're going to be buying against lows, that means if they break against the lows, you better just walk out or walk away. And if you don't like the reason why the thing's moving, you don't like the sort of the price action, specifically, there was one name that I walked away from here recently because I looked at the chart and I was like, the reason why I got into this was because of an inverted head and shoulders. Now that inverted head and shoulders is gone. I wonder why the data is missing here. Something's not right. That's weird. Let's see if I I don't want to save it. I don't want to. Oh, well, let's see what happens. Survey says probably wiped everything out. Nope, still there. Yeah. So this one I was okay with. I mean, I had this nice wide bottom. Actually, I went in and snuck in and bought this W here. Turns out that another W did come in here. So I'm comfortable being in this. I'll tell you, if we lose these lows, in fact, actually, I did an interesting comparison where being able to buy this level, you'll notice that if I risk to a break of these lows, that's basically about a 50% loss. So you should actually look at this and go, oh, that's that particular risk taker that you were taught in the education program. Little old ladies buying here, they actually will risk the whole damn thing. And I'm not comfortable with that. If this thing breaks down through here, I think I just take the Joe six-pack approach and walk away. The margin traders, you can see them over here. They got their reload zone within reload zones. They actually have a very sexy little risk window here to basically buy down in this zone here, which I think, technically speaking, is the buy. You know, if we look at uni, and this is kind of one that I kind of flubbed here. I bought this inverted head and shoulders, but, you know, same sort of logic. If I actually wanted to risk down to these lows, which is where I think you really have to risk down here, that's 100 and what is that? 122%. So I mean, just a ridiculously huge number. And I didn't feel comfortable having to sit on a losing trade like that. If we go here to here and then there to there, that's better. Right? That's that big Joe six-pack, kind of big fat now number, 50% of my capital. I bought this because I thought this inverted head and shoulders was going to work. And boom, sorry, Brian, you're wrong. It's interesting how it's trying to basically do another fractal down in here. It did put in this little W here. So if you wanted to trade that, there's a cute little entry there. That was probably, you know, like our margin traders kind of trade, nice small risk window. That I think was actually a half decent trade. I really didn't like this. And number one rule for me, if I don't like a trade that I'm in, I don't feel good about this idea. I was clearly proven wrong here. Just get the fuck out. Just get out. Just get out, get out, get out. Where's management? It turns out there's a W. I could have come back in on the trade here. I left it alone, but that's, if I was trading this, that's probably what I should have done, is just hop right back in basically where I was exited. But this nasty failure through the bottom of the head here, I didn't like the look of this at all. So when I don't like something, I just say, you know what? I don't need to be a hero here. It wasn't too much of a risk. Just walk away. And that's what I did. I would say for the noob to investing, and half of the reason why I had little old lady sort of, you know, client approach, keep in mind, little old lady got a lot of flexibility in your behavior. One thing little old ladies do not like is if I call them up and say, hey, I've got this great investment idea. I want you to invest. And she says, okay, Brian, sounds good. And then a week later, I come back and I say, oh, you know what? This idea is no good anymore. I want to get out and I'm going to have to take like a 25% loss. They hate that stuff. So that's the number one reason why I did the little old lady approach, is they don't like to sell. All right. So I hope that helps answer your question. I don't even really think there is a right or wronger approach. I'm just going to simply say that if you are trading, then you should be commensurately making bigger returns when you are proved correct. And if you are not wanting to watch the screen 24/7, then you want to take a very conservative, slower approach, then you go the little old lady approach. And I might even argue that probably the halfway between is the Joe six-pack, right? And I actually think more of you are Joe six-packs than you really believe. You don't realize that you are. It's just everybody seems to warm up to that little old lady concept. And so as a result, everybody wants to do that. But I would actually argue most of you are actually Joe six-packs. All right, number 3. Hi, Brian. We had today MACD class with Grim, and I asked about your counting the lines in MACD histogram. Grim referred me to you because this process is specifically yours. Can you explain to me what behind the process when you count the lines? Thank you, Ramon. It's more like, you know what it reminds me a lot of is like the Tom DeMark logic. So you'll notice that on like if you do the Tom DeMark counting indicator, and I can't remember the logic behind this just off the top of my head, but you'll notice like after a certain amount of bars up, we start to get 8s and 9s. Basically, the market's moved one direction too long, and usually there needs to be some sort of correction going the other way. Notice we have like 8s and 9s coming down here, and the market has to go the other way. You can see down here, just one directional, we hit 8s and 9s. In this particular case, that was the direction going the other way. It wasn't much, but it was direction going the other way. So kind of think of the MACD histogram as sort of a similar kind of conversation. Let's see if I can just get a blank one here for you. Doesn't have a whole bunch of gobbledygook all over it. Let's go like that. It should be the same thing. Looks like that's on. Well, there's an 8 and 9. It's not really the best one. Kind of hoping you'd see a little bit better examples. Let's just do the tech stocks. Maybe it's there. All right. So yeah, here's a good example. So 8s and 9s. So if you want to sort of, do some research, use the Tom DeMark logic. Why is he looking for reversals after 8s and 9s? Now, what I've told you is that what I've studied with MACD is kind of the same logic. So we can put everything else away here for now. And I have found that markets, right, enough buttons to push here, right? Jesus. No, I don't know where this is. There we go. Okay. If we think about this as this is the end of a move, right? 8s and 9s. If you kind of count backwards, right? You can kind of go there's the top in MACD. There's the bottom. Notice 1, 2, 3, 4. So 4 actually sort of carved out a W. Then if we do the count from where it actually broke out, 1, and we do the same logic. And we go breakout is here. So 1, 2, 3, 4. That to me starts to say that, this move is kind of getting exhausted. Now it turns out that this top, oh yeah, okay. Well, that was that high there. So, if we do the whole count here, and we go from the start, 1, 2, 3, 4, 5, 6, 7, 8. So, actually I kind of like that a little bit better. Basically, that's a pivot low to 1 bar below before the pivot high. Really, it was 9 in that particular case. But if you kind of think, and I actually don't like to use the bar that made the low, because keep in mind, this was heading down. So I actually kind of prefer to use that bar right there where we went up, right? So 1, and if we do that, and we go 4 and 4, that actually lines up even better with that peak. So think of this as just the one directional push, and usually it's in like 2 bars of 4. I don't know why, it just is. Then we can do the same logic going the other direction now. So notice that was the peak. So 1, 2, 3, 4. And then this thing actually broke on the 5th bar there. boom, double top. We could do the same logic here and go following the peak, 1, 2, 3, 4, 5, 6, 7, 8. Now I do like this, as this is an event where we've crossed into the bullish side. So I do like that as a count level, using the 0 as a reference. I don't mind that at all. What I would say here, though, thinking along the lines of 4, 8s, and 12s, you can kind of see that from this peak down here, 8 bars, now we're heading. I would even say, okay, well, then what's 12? So 4, 8s, 12s. So 8, 9, 10, 11, 12. Well, we're awfully close. There's the bottom at 13. So, I mean, hopefully what you saw was, the pivot will come in somewhere around these 4, 8s, and 12s. In this particular case, I think it turns out it's 13 from exactly where it broke to where it broke. And this one here, it's, so where it pivoted, 1, 2, 3, 4, 5, 6, 7, 8, 9 bars. I mean, in this particular case, it's 9s. But what I've often seen in my career is that these things will move in either 4s. All right, so maybe we change this to, I don't know where the hell the color thing is. Anyway, 4, then 4, trying to give you sort of an idea where the hell is, this thing, where do we run out of steam? Is there actually anything that's ever been written up on this? No, I've never seen anybody do any kind of talk or anything about this. But I often see that, and I think this is a great example where you can see it went up, down, up, fail. These things usually happen in like 4s. Then we'll get, just even this move off of here, let's just, just for fun, count this. So 1, 2, 3, 4. So we had 4 back to 1, 2, 3, 4. Yeah, I guess so. Back to the midpoint, although I guess 4 is there. 1, well, I guess that's including that. But 1, 2, 3, 4. I do like that. So 5, 6, 7, 8. Well, actually, it turns out this was another 9er. Maybe this one in particular is moving in 9s. Tough to say. What I want you thinking, though, is I want you thinking, and actually, why does that say 7? 1, 2, 3, 4, 5, 6, 7, 8, 9. Isn't that bizarre? Anyway, there's 8. I think that's 8. Maybe it's 9 in Bizarro world. But let's do another one, right? So this peak here, number 1, how long does it take to get back to the 0 line? And it looks like there. So 1, 2, 3, 4, down into there, I guess. And then what's interesting about all of this is it almost looks like this is another 4. 1, 2, 3, 4, 5. So I'm noticing that these, I don't know, maybe an up move. How long did that take to exhaust itself? Another move of 4. And maybe we'll just pick this one here, right? This was heading down, so it turned up. 1, 2, 3, 4, 5, 6, 7. And probably this says 8 when I do this. Nope. All right. Anyway, so there's 7. So, I mean, I don't know whether you can see this or not, but hopefully what you're seeing is, there's these they sort of move and the way that I like to think of it is 4, 8s, and 12s. So here, for example, this is beyond 4. So you're kind of like, okay, well, where's the next count I should do? Well, just replicate that. What's 8? Okay, well, it turns out there is the pivot. When you get a trend really going, like here, for example, this might be like a 12 to there. Oh, look at that, 12. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. There's 13 there. Also, look at this one. So there's a good example. I mean, I just randomly picked an asset, and hopefully you can see this. So, there's the bottom, 1, 2, 3, 4. Hey, and that's carved out a double bottom. That's a W. Right? We could even count this all the way from here, all the way up to that peak. What is that? Well, there's 13. So if we had gone 1, 2, 3, 4, 5, 6, 7, 8. So there's your 4s and 8s, another double bottom. Then 9, 10, 11, 12. At this point, I'd be kind of going, this move's getting a little bit old. And turns out that it was a couple more bars, right? All the way to there. I think probably the best way for you to think about this is Brian's observation. I don't really have it as a module per se in the course, other than I've seen this happen repeatedly. And what I would suggest you do is just get into the habit of starting to count how many bars have we moved in a row. And if we start getting near a 4 or an 8 or a 12 or a 16, then you should be thinking that, hey, this move's getting a little bit tired. And maybe I should be thinking about a reversal heading the other direction. So that's probably the way that I would describe it. Kind of the same thing as like I said, the Tom DeMarks, after a certain amount of count, he starts saying, it doesn't necessarily mean that this market's going to crash here, but maybe it needs to take a bit of a pause and go sideways. In this particular case, it just kept steaming ahead. This case, it had to go sideways for a few days. This case, it had to go sideways for quite a bit. In this case, it actually was a full-on pivot and we had to go the other direction. In this case, it was a full-on pivot and we had to go the other direction. So I would think of it sort of the same way. If we're in a topping pattern and we get to the 4th bar and you start to see it reverse, you go, you know what? I got a funny feeling that market just reversed. And then you can start counting, 4, 5, 6, 7, 8. Where should this thing exhaust itself? So I hope that helps. Holy shit, look what time it is. Yeah, I got to get out. Damn. All right, so I think we're going to have to leave it at that. I got to go. Thank you very much, Bob, for reminding me. I appreciate that. Thank you, Eddie. I guess we'll just pick this up in the daily brief tomorrow. So if you enjoyed these conversations, basically I do this with the community, 4 or 5 days a week. And we'll just pick up with the questions where I left off. So. Anyway, I think we'll leave it at that. Hey, we made $16.83 today. Woohoo! I love that. At least so we can pay for Chris now. That's good. Hope you enjoyed the broadcast. Hit the like button, subscribe, ring Colleen's bell, wherever the hell Colleen is in this world. Thank you very much for all the positive karmic wishes for Liam and I. I got to head out and give him a half decent afternoon. So PMA for the win. I think we'll leave it at that. Have yourselves a great day. All the best and bye for now.